Texas was supposed to be the answer. Affordable homes, no income tax, endless land to build. But in 2025, the dream is cracking. Dallas, Austin, Houston, cities once booming, are now showing the same warning signs we saw in California. And tonight, we reveal the 10 Texas cities you must avoid if you're thinking of buying a home in 2025.
To understand what's happening in Texas, we need to rewind just a few years. During the pandemic, the state became America's migration magnet. Families fleeing California, New York, and Illinois chased lower taxes and bigger homes, sending prices in cities like Austin soaring nearly 50% in just 2 years. Builders rushed to meet demand, covering the suburbs with brand new developments. For a moment, it felt unstoppable, a modern-day gold rush. But in 2025, the tide has turned. Mortgage rates stuck near 7% have pushed affordability to record lows. A house that once cost $1,500 a month now runs closer to $2,500 or more. Insurance premiums have doubled in many counties after floods, tornadoes, and billion-dollar hailstorms, adding thousands more to annual costs. And oversupply means entire neighborhoods of new homes now sit empty, waiting for buyers who never came. The result? Texas, once the hottest housing market in the U.S., is flashing the same red warning signs we saw in California before its crash. And if you're thinking of buying here in 2025, you'll want to know which cities are most at risk. Tonight, we break down the 10 worst places to buy a home in Texas.
10. Frisco. Frisco was once the shining star of North Texas, a city that seemed to embody limitless growth. Just 20 years ago, it was little more than farmland. But as corporate headquarters arrived and tech companies expanded, Frisco became one of the fastest-growing cities in America. Its schools, stadiums, and shopping centers made it a magnet for families chasing opportunity, and it quickly earned the nickname the Silicon Valley of the South. That growth, however, has come at a cost. By 2025, the median home price in Frisco has soared to nearly $690,000, almost double the Texas average. With mortgage rates stuck near 7%, that figure translates into more than $5,500 a month when you include taxes and insurance. For many buyers, that's simply out of reach. The affordability that once fueled Frisco's boom has all but vanished. Now the market is showing cracks. Inventory has jumped more than 40% compared to last year, and homes that once sparked bidding wars are sitting unsold for weeks. Sellers are slashing $50,000 to $100,000 off their asking prices just to attract offers. Families who stretched their budgets during the pandemic boom are beginning to drown in payments, and investors are finding rental income no longer covers their costs. On the surface, Frisco still looks like success. Gleaming schools, high-end shopping, luxury communities. But beneath the polish, its housing market is flickering. What was once the dream of a tech-powered future is becoming a financial strain. And in 2025, Frisco now sits among the riskiest housing bets in Texas.
9. Killeen. Killeen rose quickly during the pandemic as one of Texas's affordable escape valves. While Austin and Dallas spiraled out of reach, families and investors turned to Killeen, drawn by its proximity to Fort Cavazos, one of the largest military bases in the country, and its reputation for lower housing costs. New subdivisions sprang up almost overnight, and for a while it seemed like Killeen was set to ride the wave of endless demand. But by 2025, that story has started to unravel. The median home price now sits at about $265,000. On paper, that's still cheap compared to Frisco or Austin, but the local wage base hasn't kept pace. Many residents rely on military or service sector incomes that simply can't support rising housing costs, especially with mortgage rates locked near 7%. What was once affordable now feels stretched thin.
The data paints a troubling picture. Foreclosures in Killeen are up nearly 30% year over year, a clear sign that households are running out of room to maneuver. Meanwhile, overbuilding around Fort Cavazos has created a glut of properties that sit unsold for months, with builders offering incentives just to move inventory. Investors who thought they'd found a safe haven are now stuck with properties that won't rent quickly or sell for profit. Killeen's challenge is simple but serious. When home prices rise faster than incomes, affordability breaks. And that's exactly what's happening here. For buyers hoping to find stability in Central Texas, Killeen may feel safer than Austin, but under the surface, its housing market is already straining under the weight of too much building and too little wage growth.
8. Corpus Christi. On the surface, Corpus Christi looks like a coastal dream. Beachfront views, warm Gulf breezes, and a slower pace of life have long made it one of Texas's most recognizable seaside cities. For years, buyers saw it as a chance to own coastal property without California-level prices, and migration from inland Texas only added fuel to the market. But beneath the postcard setting, the economics of home ownership here have shifted in a way that's turning the dream into a gamble. The median home price in Corpus Christi now hovers around $310,000. That sounds modest compared to Austin or Dallas, but the real cost is much higher. Insurance premiums, already high after Hurricane Harvey, have doubled in recent years. Today, many homeowners face annual bills of $5,000 to $8,000 just for insurance, a cost that rivals a second mortgage. Add in elevated property taxes and rising maintenance expenses for coastal living, and the numbers no longer add up for many families. The risks aren't just financial. Corpus Christi sits squarely in a zone of rising flood and storm exposure. That has scared off both insurers and investors, leaving buyers with fewer options and higher costs. Some insurers have pulled out altogether, forcing residents into last resort coverage at inflated prices. Builders, once bullish on coastal development, are slowing projects, and inventory is beginning to pile up. For many, owning in Corpus Christi is no longer just expensive, it's dangerous. Between climate risk, ballooning insurance premiums, and a shrinking pool of buyers willing to take the chance, this Gulf Coast city is shifting from opportunity to liability. In 2025, it's one of the riskiest bets in the Texas housing market.
7. San Antonio. San Antonio has always been known as Texas's more affordable big city, a place with deep history, family-friendly neighborhoods, and a slower pace compared to Dallas or Houston. For years, it was the safe bet for buyers priced out of Austin, with steady demand and a reputation for stability. But in 2025, even San Antonio is starting to show cracks beneath the surface of its housing market. The median home price here sits around $320,000, still below the state's high flyers. Yet affordability is slipping fast. With mortgage rates near 7%, families now spend a much larger share of income on housing than they did just a few years ago. Property taxes, often over 2%, push costs even higher, making monthly payments feel anything but affordable. At the same time, supply has surged. Inventory is up more than 55% compared to last year, and the average home now lingers on the market for over 2 months. Builders flooded the city's outskirts with new subdivisions during the pandemic boom, and many of those homes are struggling to find buyers. The oversupply has created a wave of price cuts, and sellers are offering tens of thousands in reductions just to keep deals alive. San Antonio is still rich in culture and history, but its housing market is weighed down by rising costs and too much building. What was once a steady, affordable alternative is now under the same pressures as Texas's flashier cities. For 2025 buyers, San Antonio is no longer the safe haven it once seemed. It's a market teetering on the edge of oversupply and affordability breakdown.
6. Plano. Plano rose to prominence during the corporate relocation boom of the last 2 decades. Major companies shifted their headquarters to North Texas,
In Plano's upscale neighborhoods, strong schools, and proximity to Dallas made it one of the most desirable suburbs in America. For years, demand felt endless, and buyers paid top dollar to secure a home in one of the region's most prized zip codes. But in 2025, Plano's housing market has hit a wall. The median home price now sits around $540,000, far above the state average. At today's mortgage rates, carrying that loan costs nearly $4,000 a month before taxes and insurance, a staggering burden for most families. What once felt like a step up into prosperity has become financially out of reach for middle-class buyers. The challenges don't stop there. Tech layoffs across the Dallas-Fort Worth area have cut into the very buyer pool that drove Plano's growth. Fewer high-income households are arriving, and job insecurity is causing locals to hesitate on major purchases. Homes are lingering on the market longer, price cuts are becoming routine, and sellers who once expected bidding wars are now negotiating downward just to close a deal. For Plano, the lesson is clear. When job security falls, so does housing demand. The city still shines with corporate campuses and luxury neighborhoods, but its housing market is slowing under the weight of high prices and shrinking confidence. In 2025, Plano is no longer the guaranteed winner it once seemed. It's a suburb learning the hard way that even boomtowns aren't immune to correction.
5. Houston. Houston is Texas's largest metro and one of the most diverse economies in the country, powered by oil, healthcare, and shipping. For decades, its endless land supply and relatively low prices made it a magnet for new residents. But in 2025, that same growth engine has become one of the city's biggest vulnerabilities, leaving Houston's housing market among the riskiest in the state. The median home price now sits at about $335,000, which looks modest compared to Austin or Dallas, but the real burden comes from costs that buyers can't avoid. After years of repeated flooding and billion-dollar storms, insurance premiums in Houston have skyrocketed, adding thousands to annual expenses. For many households, those insurance bills rival a second mortgage, pushing affordability to the breaking point. At the same time, supply continues to surge. Inventory is up nearly 50% year over year, and homes are taking far longer to sell. Houston's flat geography and endless land mean builders rarely slow down, even when buyers pull back. The result is a swelling stock of unsold homes, echoing the same too much supply, not enough demand formula that triggered collapses during the 2008 housing crisis. Houston remains a vital city, but its housing market is flashing red. With rising insurance, oversupply, and cautious buyers, the balance that once kept Houston affordable is starting to crack. For 2025 buyers, the risks here aren't hidden, they're already in plain view.
Fort Worth. For years, Fort Worth carried a reputation as Dallas's more affordable cousin, a place where families could enjoy a slower pace, historic charm, and lower housing costs without sacrificing access to jobs in the Metroplex. That balance made it a popular landing spot during the pandemic migration boom, when buyers were priced out of Dallas or Austin but still wanted a piece of North Texas growth. By 2025, though, Fort Worth's affordability edge is gone. The median home price now sits around $375,000, a sharp climb from just a few years ago. Layer on mortgage rates near 7% and steep property taxes, roughly 2.1%, among the highest in the nation, and families are facing crushing monthly payments. In many cases, housing now eats up 40% or more of household income, well above the affordability threshold that experts consider healthy. The strain is beginning to show. Homes linger longer on the market, price cuts are becoming common, and the steady stream of inbound migration that once fueled Fort Worth's rise is slowing down. With fewer buyers able to stretch their budgets, inventory is creeping up, leaving sellers frustrated and builders cautious about new projects. Fort Worth still offers culture, history, and access to jobs, but its housing market is cooling fast. When affordability breaks, migration slows, and that simple equation is reshaping Fort Worth's future. What was once the Metroplex's safe bet is now a market flashing warning signs of deeper trouble ahead.
3. Dallas. Dallas still looks like success from a distance, a glittering skyline, booming highways, and a reputation as one of America's fastest-growing business hubs. For years, the promise of corporate relocations and a steady flow of high-income jobs drove relentless demand for housing. Families, investors, and transplants all saw Dallas as the future. But in 2025, that future feels less certain. The median home price now hovers around $420,000, and buyers are pulling back. Homes that once disappeared in a weekend now sit unsold for 90 days or more. Sellers who expected bidding wars are facing silence, and price reductions are creeping across the market. The shift is clear. Demand is fading, and supply is quietly stacking up. One of the biggest problems is the gap between renting and owning. In Dallas today, it's still cheaper to rent than to buy, often by hundreds of dollars a month. That imbalance keeps would-be buyers on the sidelines, especially younger families who can't justify locking into a costly mortgage when renting saves them money. The bigger worry is jobs. Dallas grew on the promise of endless corporate relocations and expanding office towers. But with layoffs spreading through tech and finance and downtown office vacancies climbing, the foundation of demand is weakening. Dallas remains a powerhouse city, but its housing market is fragile. A reminder that growth built on speculation can disappear just as quickly as it came. Number 2. Austin. Austin was the poster child of America's pandemic housing boom. From 2020 to 2022, the city transformed almost overnight, with home prices soaring by nearly 50% as remote workers, tech giants, and investors flooded in. Bidding wars became the norm, suburban sprawl raced outward, and Austin was hailed as the new Silicon Valley. For a moment, it looked unstoppable, the ultimate success story of growth and demand. But in 2025, that boom has become a bust. Since its peak, prices have already fallen by almost 15%. The median home price still sits around $540,000, with many suburban areas even higher, but affordability has evaporated. What was once considered an exciting investment is now a financial stretch for local buyers whose wages never caught up to pandemic-era spikes. The cracks are widening fast. Inventory has doubled since 2022, with homes that once vanished in days now sitting unsold for months. Tech layoffs have hit hard, stalling the influx of high-income workers who once fueled the frenzy. Rising property taxes and living costs have made the city less attractive, slowing migration and leaving some neighborhoods dotted with price cuts and for sale signs. Austin's transformation from boomtown to cautionary tale has been swift. The city still has its music scene, its tech culture, and its draw for dreamers, but its housing market tells a different story. Once seen as invincible, Austin now looks like Silicon Valley's housing crisis has simply shifted south, and in 2025, it's one of the riskiest places to buy in Texas.
1. Round Rock. Just north of Austin, Round Rock was once celebrated as one of the fastest-growing cities in America. Families moved here for good schools, new master-planned communities, and quick access to Austin's booming tech jobs. Builders raced to keep up, carving entire subdivisions out of farmland, and for a time, Round Rock was the symbol of Central Texas prosperity. But by 2025, that prosperity has soured. The median home price now sits around $470,000, and at today's interest rates, carrying that mortgage costs over $3,800 a month once taxes and insurance are included. For many households, those numbers simply don't add up. What looked like an affordable alternative to Austin has become nearly as expensive without the same job base to support it. The market is drowning in supply. Inventory has surged nearly 70% in just 2 years, and the flood of new construction hasn't slowed. Builders continue adding homes even as demand cools, leaving entire neighborhoods lined with for sale signs. Buyers who rushed in at the peak are now underwater. owing more on their mortgages than their homes are worth. Price cuts are common, but they've done little to ease the oversupply. Round Rock's rise was built on speed, but that speed has become its greatest weakness. With costs high, supplies swelling, and demand fading, the city has shifted from boom town to bust risk almost overnight. In 2025, Round Rock isn't just a warning sign for Texas, it's ground zero for the state's housing correction.
Texas is still Texas, a state with low taxes, a strong job market, and warm weather that continues to draw people in. But when it comes to housing, caution is essential. The very forces that once made Texas so attractive, rapid growth and endless building, are now creating risks that buyers can't ignore. If you're set on staying in Texas, the safer bets are often found in mid-sized cities like Waco, Abilene, or Lubbock. These markets remain more stable, with lower prices and far less speculative buying compared to Austin or Dallas. For those open to relocating, out-of-state options like Tennessee, Indiana, and the Carolinas are pulling in steady migration without the same level of oversupply. And in many major Texas metros, the smartest short-term move may be to rent before buying. Right now, renting can be 20 to 30% cheaper than owning the exact same home. The lesson is simple. Don't chase hype. Whether it's Austin's tech boom, Dallas's skyline, or Houston's sprawl, buying too quickly could cost you tens of thousands. Patience and a clear eye on affordability will serve buyers better than rushing into an overheated market. Because the truth is, Texas's housing story is beginning to look a lot like California's. Rapid growth, soaring prices, and now cracks forming beneath the surface. The Lone Star State will always shine, but in real estate, that shine is starting to dim. If you want to stay ahead of the next big shift in America's housing markets, subscribe here on Planet Migration. Because sometimes the smartest investment you can make is the one you don't.